Hey Canada, are you ready for some new? Well, I should say more. They're not really new. They've been some people, very few in the establishment media have been at least putting out some articles pertaining to the massively overinflated housing bubble here in Canada. And while they don't necessarily want to rock the boat economically, I guess at this stage of the game they realize, well, we got to say something, because if the housing market crashes and we haven't even at least give any forewarning, I mean, we're already almost irrelevant as it is. So, right? But get ready for some more revelations. And as a little disclaimer, those of you who want to keep living in this bubble or pretend that the housing market in Canada is the exception to everyone else on the planet, basically, and it's going to continue to grow and expand forever and ever and ever, and everybody's always going to make money off their houses of this speculative market, well, you might want to walk away from this particular video right now, because the information pertaining, and I think I got 4 or 5 articles that I'm going to be referring to, are going to be quite striking and disturbing to your sensibilities if you really believe that there's not an imminent correction or crash in the housing market that's impending. Financial Post economy, that's trending. In Canada's housing-dependent economy, new cooling measures send shivers. Ooh, right? I mean, the new cooling measures that are supposed to be sending these shivers. Well, this is a Bloomberg News article that's been reposted on the Financial Post site, but I'm going to go to another article. It's another Financial Post that will kind of explain a little bit to this. It's right in line with what we're talking about, but it's in regards to these cooling measures that's going to send shivers down, the Canadian economy, whatever. Anyways, listen to this one. This one is under the mortgages and real estate section. Also trending, home sales in Canada could fall 8% on new mortgage rules, Finance Department projects. But the sales, so the amount of sales could fall 8%. But here was the part that I found most striking and disturbing. So, let me read this part. Canada's Finance Department projects home sales could fall as much as 8% in the first year after new housing regulations are implemented before rebounding based on an analysis using historical data. So even if they're saying there'll be a little bounce or a little dip and then there'll be a bounce, so more or less no worries, right? Finance Minister Bill Morneau announced the new rules Monday. They include a stress test for home buyers and increasing the eligibility requirements for mortgages to get insured. And they come into effect as early as October 17th. The announcement has already eroded mortgage finance company shares and prompted forecasts of slipping mortgage growth at the banks, as well as fewer home purchases and a price cool down. But listen, let's get to the price cool down. Wait till you hear these numbers. I mean, but there's another number we gotta everything is all about the correlation, right? But we already know that in Ontario and Vancouver and places like that, housing prices have increased year over year in both those markets roughly around 20% year over year. Think about that, 20%. That's a substantial amount in 1 year. But listen to this part. Here we go. Listen to this one. So, and this is the fear they're trying to put. It's like, did they think? And this, in reality, it's their warning, but they don't want to give you a genuine warning, because if someone reads this, be like, well, I'm still going to be ahead of the game, right? Now listen to this. The measures will end or erode home sales by 10% and property prices. So home sales, the amount of sales, the amount of home sales. Not the price of what they're going to be selling for, but the amount of homes that are being sold could decline by 10%. But listen to this one. And property prices by 5%, Royal Bank of Canada analyst Jeffrey Kwan said, without specifying a time frame. But 5%. If just in 1 year your house increased value by 20%, pure speculation, of course, because not like your house. What the walls just, oh, look, my walls are gold today. Hey, and that's real gold. No, but I mean, come on, or silver, or, oh, look, somebody dropped a suitcase of money in my house. I mean, it's all speculative value. It's not a real value, but if it increased by 20% in 1 year, and these new cooling measures are going to have such a dramatic effect, well, if it's only going to be a 5%, so in other words, it's not even a negative as far as beyond the benefit. So if you gain by 20%, well, now if all these things are only going to shrink it by 5%, well, you still gained by 15%. So it's a net gain in the value of your house. So who's going to fucking care about reading this shit? If I was reading this and I was one of the idiots that fell into the narrative that's constantly put forth by the central planners of these fuck sticks, I'd be like, well, that still leaves me 15% ahead of the game. And 15% in this low growth environment, I'm loving it. So in reality, even when they put out articles that should be honestly telling people it's going to be a whole lot more than 5%, they're trying to do that. And these are the the very technical terms they use is a soft landing. They want the housing market to take a soft landing where it's only a small, hey, we'll just knock a little bit off so consumers can, it'll only be 5%, but that'll give consumers 5% where they can spend their money elsewhere, right? Well, actually, the 20% speculative. So, sorry, my bad there actually is, no, so they'll still have 15% of speculative increased value where they can, consume and prop up the economy, right? I mean, come on, man. This shit's so fucking crazy. Once again, let's go on to another article. Listen to this. I love how they do it, too. It's like, oh, jeez, they're just such a bunch of swindlers. End of Canada's, in quotations, unique mortgage system means higher bank costs. Well, the end of Canada's unique system is, what they're saying is, and I'll go down and give you a little heads up. The days when Canada's banks could offload much of the risk of underwriting mortgages onto taxpayers may be drawing to a close. Canadian Finance Minister Bill Morneau disclosed plans Monday to begin consultations on sharing the risk of mortgage default with the country's lenders. Sharing risk. So it's like, shouldn't it all be on the lenders? Like, if I was lending someone money and they don't pay me back, shouldn't I be the one that has to suffer all the loss? I mean, I was the one that made the decision to lend the person money, right? Duh. Shouldn't I be solely responsible for anything that I lose? It's between me and the lender. Or the lendee, the borrower. So, of course, it should be only us. But in communist, socialist, fascist fucking Kanakistan, Canada, the taxpayers are always on the hook to fucking foot the bill, right? So, like I said, there's no free market. There's no moral hazards. It's just do it and don't even worry about hoping for the best. Somebody will bail you out. And now they're not even saying it's going to be a complete reversal. They're just going to share risks. Let's get on here. The move was part of a package of measures designed to stabilize the housing market after years of soaring prices in Vancouver and Toronto. While it's not clear what form the risk sharing will take, a deductible on mortgage insurance may be one option. Any move will likely require Canadian banks to boost capital levels and result in higher mortgage rates, according to analysis. The bank's industry group, which includes Royal Bank of Canada and Toronto Dominion Bank, is already fighting back. Oh. This could have profound impacts on the insured mortgage funding market and the equity market's perception of credit risk in the banking sector. Jason Bilodeau, an analyst with Macquarie Capital Markets, said in an October 4th note to clients. One reason Canada's banking industry has been cited as one of the world's most stable is that the government backs all the mortgage insurance obligations in the market. That includes fully backing mortgage insurance sold by Canada Mortgage and Housing Corporation, CMHC, and 90% when sold by private insurers like Genworth MI Canada Inc. that compete with the government agency. This ironclad government support on insured mortgages is unique in the world, according to the Finance Department. More than Half of Canada's 1.4 trillion home loan market is made up of insured mortgages, according to figures from Bank of Canada and Finance Department. Homeowners are required to take out insurance if their down payment is less than 20% of the house value, though banks often buy so-called portfolio insurance even when the down payment exceeds that level. So think about it. I mean, they talk about, you can, you hate communism, or you grew up, being told how terrible it was, or socialism or fascism. How is this any different? I mean, there's nothing that involves free markets here. As you can see, they all use governments. They all use collectivism. They all use theft, forced subjugation as a backstop against any economic detriments or downfall. So, like I say, it's full-on fucking collectivism, no matter what kind of iteration or even a new iteration. Don't even call it fascism, collectivism, or socialism and communism. Call it a new one, whatever you want. Crony, capitalism, corporatism. Come up with a million different isms or whatever name you want to call it, but it still comes down to the same thing, is people are being held responsible for their malinvestments or bad deeds. That's what it really comes down to. The taxpayer are the ones, the lowly slaves, the wage slaves and serfs in Canada are the ones that are the final backstop, the final buck, right? That are having to pony up and pay for all this shit. And that's not the ones that are, the taxpayers that are the fucking idiots that are falling and going along with this shit, fine, yeah, they should be part of it too, because you're part of that. You jumped into that soup. You jumped into that boiling pot. Good for you if you got to suffer the consequences too. You're all part and parcel. You're all swimming around that shit. So yeah, you all should suffer the same. But what about people like myself? What about many people that I know in Canada that aren't part of this shit, that are trying to be responsible, try to do the right thing? Why the fuck should any one of us have to be forced to pay or pony up for the irresponsible acts and deeds of these motherfuckers? Makes no sense to me, and I sure as fuck won't. I can tell you that right now, because I know they have the capability. They have the ability, because they can steal from me at any time they want through taxation, or get my employer to steal from me, or anyone else, like, using government force and enforcers to take from me. Well, yeah, I'll just make it to the point, which is what I've said in prior videos. I'll make as little as possible that it won't even fucking. You can try to steal from me, but if there's nothing, if the well is dry, good luck with all of that. But in reality, that's what's destroying the economy. It's like I say, none of this shit works properly. Central planning and forced subjugation, yeah, it's not exactly a good deal, right? Shock and revelation. Now, let's go to this first article that actually, this one here, and the headline on it was like, yeah, this kind of stuff needs to be discussed and talked about. Oh, here's another one before I get that one. Toronto home prices soar another 20%, but market now faces new mortgage rules. So that was, like I was saying, where there was an increase for the year of 20%, but now the mortgage rules are going to decrease it by 5%. So I won't really read into that article too much. But once again, it's another financial post under the mortgages and real estate section. But let's get back to here. This is the final one that I'm going to reference in this particular video, but listen to this. Canada's dependence, and it's the trading desk, investing in the trading desk in the Financial Post. Canada's dependence on housing looks a lot like the U.S. in 2005. And think about what was happening in 2005, 2006, 2007. You had all these fucking idiots, just like we're seeing in Canada. Oh, no, it's great. No, the housing market's great. No, it's not overheated. No. We're doing great. Look at how good the economy's doing. Hey, at least we're not in a recession. Hey, we're seeing positive growth numbers. All this kind of fucking rhetoric and bullshit was talked about continuously in the U.S., and there was only like a few people like Peter Schiff and Ron Paul and these people that were trying to say, like people that understand actual real like Austrian economics and real world fundamentals and free market fundamentals. They were saying, no, this stuff's going to come to a head at some stage of the game. But yeah, get the hell out of Dodge. But nobody, if you go and watch some of the videos, and you can go on YouTube and find millions of them, well, not millions of them, but lots and lots of them, where everyone, all the political pundits and the media personalities, they were making fun of people like Peter Schiff and Ron Paul. Oh, what are you talking about, man? The housing market's great here. Look, just last week it went up by whatever, right? And everyone was making fun of them. And it was all fun and games until it wasn't, until the housing crash actually came to fruition, actually happened. And then they're all like, and then it was, you see, Peter Schiff and all of them, they get to go on and say, hey, I told you. and it killed them. Which is why now that they're trying to reinvent the wheel again and trying to in the U.S. and we'll do better this time. We're going to be better liars. But like it's the truth tellers, the ones that are truth is always going to come to fruition, whether you like it or not. Reality is always going to play out, whether people that like to deny reality want to accept that or not. And in Canada, yes, the housing market is so massively overvalued and inflated. Yes, there's going to be a crash or a major correction, which is basically the same word, right? Major correction or crash. But there's going to be a dramatic difference in the speculative value of the roof that's over your head. It's just a roof over your head. And if you look at the materials, that's nothing. I've worked in construction industry as a child, as a young man, and now for the last few years once again. And I'm telling you, the houses, the material they use to build these houses, vastly inferior to the materials that were used decades ago. So these houses are not going to maintain their structural integrity or hold any value over the long run. They look nice. They're pretty, right? Maybe got a lot more space, but the materials that they were built with, they're not going to hold up. They're not going to stand the test of time. So like I said, this is all going to come to fruition at some stage of the game. And all those people that are jumping on the gravy train or the dumb boat, I don't know what the hell else to call it, but the ones that just want to keep going along to get along, right? Join the crowd. No, you go ahead. Don't listen to people like me. Whatever, I got no skin in the game. Whether you win or lose, or whatever happens to you, when the decision you make, it doesn't have a whole lot to do with me, because like I said, I've covered my bases. I've made sure that I'm not going to be the one that's going to have to be held responsible and take care of your dumb asses. But you need to recognize and realize that this reality is going to play out, whether you close your eyes, cover your ears, or try to live in a dreamland. Reality is going to play out whether you like it or not. It's Canadian Libertarian, and I love liberty.